We'll be there in a second.
Yeah, leave that door open.
Okay.
Right, so in front of you should see a screen with the futures S&P daily. Tom, you ready? Yes.
Yeah, hi everybody. Tom Williams speaking to you here. Thank you for that, Peter. As you all know, Peter's the computer expert. If anything's not quite right, he's the guy that jumps in and solves all the problems. And I must say that Rita, his wife's also useful as well. So it seems to run in the family. Anyway, can they see my chart?
They can.
Right, now, okay, what we got here, this is the future daily chart of the S&P 500 future. And you can see today, right at the end, look, Friday. Right here, look, I've got a wide spread down, closing near the low. The volume's not too high, but that's understandable because 3, 4, 5, the market's only been open, what, 3 hours or so.
So it's not the end of the day, it's more the daily running live.
It's not the end of the day, it's a daily chart running live, which I always like to look at to get some idea of the signposts of where it seems to want to go or likely to go. Now, we talked about this last week, and I think we said, see, those were the last few days here, and these bars did not look strong at all. They looked a bit weak. However, I did say, don't be surprised if it doesn't touch that lower trend line. And this is Monday, look. And it bounced off that lower trend line and found enough energy and push to move that up, look, for the last 3 days. Now, this huge widespread down here like this, if you think about it, it's quite possible that could happen because you've got no real serious looking buying here, look. Where's the stopping volume? Admittedly, there's a little bit of no supply on that bar, look. And don't forget, a lot of these traders, including some of the smart money, they do trade on these trend lines because they do work trend lines, and that's why, look. And it's bounced off this.
It's a midpoint or something.
It's like
it's the quarter point of the larger.
It's a quarter. Yes, it's a playing field, as Gavin puts it. But they work, look. Now, so this is, to me, this looks bearish. Widespread down like that on a Friday, don't be surprised if that, but when you look at it, there's nothing really up here, look. Where's the massive volume? Where's the supply hitting the market? And also, there's nothing much here, look. Admittedly, as I said, that bar's down, look. There's no selling pressure. And we noted that it might bounce off that trend line, which it did, look. But I was surprised it went up like that, to be quite honest. But this definitely looks like a sign of weakness. Now, what we do now, a 15-minute chart, Peter?
Okay.
Thomas says they're celebrating the 1987 crash.
What are they celebrating, are they? Okay, now this is a 15-minute chart. I mean, this shows a weakness. Whenever you see these wide spreads down like this, right, it's got a signal on top.
Well, it's a yellow box.
It was going to be no demand, but not quite right.
Anyway, okay, so we have a warning there, widespread down like that, right? But the significant thing is, if the market's weak, you'll see a no demand blue bar, look, as it tries to go up. And there's not a lot of buying on that bar there, and off it comes. Now, notice how this red trending system works. If you happen to be short, right, and you want to stay in the trade as long as possible, all the time those bars are red, look, as they mark it down. And the reason why these markets fall in these weak markets is the professional money is not supporting the price. They're letting it fall automatically. So keep that in mind. And of course they're short, but they would have shorted mainly at the top here. But they're certainly not supporting the market. And that's what's going on at the moment, look. So we have a widespread down again. Now there is an increase in volume there. However, when you look at these bars, there's absolutely no demand at all. And that's why it's fallen, still falls, look. However, it does look like some sort of stopping volume may have appeared. But we want evidence. And what we'd expect to happen here, if this was bullish, or if they were anticipating some higher prices they could make some money on, this will go sideways like this for a bit. May even go up a little bit. You may even see a red bar, no demand, and if they mark it back down into this area, I'll draw a line through there, look. Look, there's the line. If this market goes up and eventually falls back down onto that line and the volume is low, you need to really see the computer like that, color the volume pink, showing it's relatively low to the other bars, then that's going to go up until some further force arrives that will knock it back down again. But that's the only thing we can read in the market at the moment. It's unusual if it doesn't pick these highs. There it is, look. It's unusual if the software doesn't pick the highs. Right. Put 5 minutes up, say. Right, 5 minutes, look. Okay, showing a similar story. There is some stopping volume here, look.
Potential professional buying.
Yeah, okay. Potential professional buying. In other words, stopping volume. In other words, it's fallen down into fresh low ground, right? There's nothing immediately to the left. Some high volume have come in, right? It's closed slightly off the low, well, top of the lower quarter, right? Now there is a red down bar there, look. And in fact, the volume is very low. And that's the reason why it's gone up a little bit, look. Because there's no pressure, there's no downward pressure in the market at that moment. And that means that will allow for higher prices. If you're a scalper, that's what you've got to study and learn. Some people love scalping. You can sit here and make a few $100 fairly quickly and enjoy yourself while you're doing it. But you must learn these principles. And that's one right there, look. You've got the stopping volume. Goes up just 1 bar this time, but down, and look at that low volume. And that's why it's gone up a little bit there. Now, are there any questions? Please type them in. Rita's.
Something to read out to you, Tom.
Eh?
Listen very. Something here to read to you, Tom. Listen very carefully. For everyone else as well. From Philip Friston. Hi, Peter, Rita and Tom. Today is the 25th anniversary of the 1987 crash. That was a bad day for me, but was influential in my decision to buy Genie Chartist. And to everybody else, that was the original name of Tom's software. Genie Chartist, the forerunner to TradeGuider 2 years later. That really was a decision that changed my life, and I will be eternally grateful to Tom for all his help and support all these years. That's from Philip for you, Tom. That was nice. No other questions at the moment.
Right, thank you very much for that, Philip. But I know you're dead keen on the market. You are a professional fund manager, so you have to be dead keen. And you're very precise. And if somebody asks you a question, you can bet that your reply is accurate, which is fine. I tend to speak a little bit off the top of my head as I go along. I never could follow scripts or bulletin boards or anything like that. I just don't seem to be cut out for that sort of thing. I just have to look at the chart and just talk about what is fairly obvious, or would appear obvious to me. Now, right. So please type in any questions, and Rita's there. Looking forward to reading them out.
Fiona says thank you to Philip for that, because it was very special and inspiring.
Can you read that in the microphone?
All right. Well, okay. Tom's.
Now, this is an hour chart, look. Now, it's amazing how all these time frames you can more or less sum up, look. There's been a rapid move down from here, where it's drifting off. Right. And that's what appears to be some sort of stopping volume here. It does look, when you see this high volume coming in like that, you have to assume that at that moment, so-called smart money stepping into the market in the chance that they could take this up for a little bit. Okay? So all these charts are readable, look. Look, now, this is an hour chart, look.
That was yesterday.
Oh, this was yesterday.
Yesterday afternoon, but it had the influence over the rest of
Yeah,
the action.
this, Peter said, that's yesterday afternoon. Right, so it's had the influence for the rest of the time.
UK time.
UK time, of course. UK, yeah. Now that's what we call a top reversal. It's marked up. There's obviously supply in that previous bar. It's marked up, look. The second bar is marked down, but the key to it is that, yes, it's in red, showing as a down bar, but the low and the close is lower than the low of the previous bar. That's normally a sign of weakness. And that's
Supply coming in.
Supply coming in. That's all we tell the computer, the programmers. Type that in instructions, that if you see that, throw up a sign of weakness with that dialog box. So the computer's not listening to the news, not listening to any advice. It's just doing exactly what you told it to do, which I have thought in the early stages was a fantastic opportunity for computer to try to guide you, because it was not influenced by all the noise, shall we say, that we're subject to. The computer just doesn't listen to it. It just does what you told it to do. And if you think these signals are fairly accurate, I say that most of them are uncannily accurate, is that then that shows you that what we're telling you is what we've told the computer to do. Generally speaking, right, that is a sign of weakness, what it practically always is, look. Now it's a green bar, admittedly there, but it's floated up on that, look. It's got to be no demand. And off it comes. If you look at, in a weak market, all these, any blue bar, up bar like that, will be on no demand. So that looks like some strength has entered the market. So you certainly would want to be buying at the moment.
Yeah, lots of things coming up here. Tom, Fiona says that, oh, Philip, Fiona says that was such a special and inspiring message from you, and thank you very much. Good, that's nice. Thank you, Fiona. That was on what Philip's said, Tom, about. There was some, Lance, Philip has the FTSE. I assume that's what your stock is from. But there's a message here from Lance. Hi guys, hope you're well. I was doing my company research yesterday and found an end of a rising market in TradeGuider. I have shorted it. However, I was looking at my e-signal charts this afternoon and found that the chart is not showing end of a rising market. I have reloaded the data on TradeGuider and the signal has disappeared. Please could we look at my trade I've taken after seeing a confused signal end of a rising market. I'd like your opinion on the chart because I could exit the trade without damage if needed. The trade is VED, London daily chart. So Tom doesn't have that data. He doesn't have London stuff, but Philip does. And if you could post your chart, or Philip could have a look, he could help you with that in the forum if possible. So sorry about that, Lance. Tom doesn't get that data. We go back to the 5 minute here. Are you talking about, Tom? Alan says, Tom says that there is not in this chart, this 5 minute, you mentioned, Tom, that there is nothing in the immediate background. Is there any special number of bars that it's referenced to in the background? Here it seems that the background is only 20 bars. How far back would you look, Tom, when you're talking about background? How many bars would you...
Don't hold yourself down to any formula. We don't use mathematical formulas. In other words, you can't ask yourself how many bars back or anything like that. I noticed that at the seminar that Gavin did yesterday, he said we don't use the open. And the reason we don't use the open is because we don't use mathematical formulas. And the reason why they want the open is they want a figure to launch their calculations off. But we don't do that. We don't need that. But what did I say? I said that there was looked like a bit of strength coming in on this 5 minute chart, didn't I?
You did.
I did.
Confirmed by the test.
See, first of all, here, look, we've got this stopping volume. Now, it's enough stopping volume to bring up a signal.
Potential professional buying.
Potential professional buying. Please read these dialog boxes because everything we know is more or less in these boxes. So we don't hold any secrets back. So look, there is fresh low ground after we've seen a decline, substantial decline. When you see it goes down to the fresh low ground, right, it's a surge in volume or activity, look. This is closed well off, well, it's almost in the middle, look, almost, right? And then so we know that definitely there's some stopping volume there. Now, what I said was look for a down bar, possibly back into that area, but lo and behold, it comes fairly quickly, look, which is here, look. And there's the low, and there's that low volume, look. And that's why it's floated up a bit, look. And that shows you the market works on supply and demand. And this is a basically weak market, look. Even so, it's still floated up. Not very dramatically, admittedly, but there's a little bit of movement there, look. And that's why, look. So that's a very good example. Try to burn that into your mind. There's a high volume coming in at that level, look. So we'll draw a line through here, say. Now, if the market comes back down to that level, or thereabouts, which it has there, look, and the volume is low, it means that the downside pressure on the market has been removed. It's been absorbed by this action here. And because it's been absorbed, the pressure is off the market for the downside, and that allows it to float up somewhat. Right? So we just have to read it as it unfolds.
Alan, yeah, Alan. Yes, Alan has got that. He understands that. That's good. Great. Philip, in answer to Lance's question, Philip says, I cannot give Lance investment advice, but will happily look at the chart for him over the weekend. Lance, if you could put the name of the stock into Philip's section of the forum, and he will look at it for you. Raphael says, hi Tom, why does it happen very often that in a downtrend we see no supply and the next bar is a widespread down? For example, the 15-minute chart on the ES, which we saw a few minutes ago. So let's put that up. So where's that, Peter?
You might look at this one here and go, oh, wow, look at that.
Okay, so it's a possible no supply there, Tom, and then the next bar will be down.
Saying that it's on the face of it could be contradiction. So you've got a downtrend, you've got a no supply bar, you're thinking that's a sign of no selling pressure, and yet it continues down.
So why does that happen? He sees that quite often, he says.
Well, you just described a classic bear market, right? That's what you see in a weak market, exactly what you said there. And the reason is, of course, professional money are not supporting the market. I mean, if you're a professional and you'd sold up top and you were short, right, you wouldn't be interested in supporting the market, would you? Unless you had some devious plan in mind. But you certainly wouldn't want to support it. But what you described is a classic weak market. You get, and you look at the weakness you've got in the background. Look at this huge widespread down here. Signs of weakness all over it, look. No demand up here, bang down. Right, there's no interest in the upside. If the market crawls up a little bit, look, it's on no demand. And then the market falls. It falls because the professional or smart money is not supporting the market. They've withdrawn all their bids to support because they're bearish. And that's it. And that's why these markets fall like this. And this is why you must, if you ever get trapped, say you happen to be long here and you get trapped in this sort of gotcha bar, we call it, right? You must close it out because they're not going to offer you any hope at all of getting out of your trades that you are now what we call potential weak holder. In other words, if you sold now or anywhere here, you would be losing money. So that you are then called a potential weak holder, and you will eventually get shaken out. And that's why these persistent down moves like this work. This is a trending system, look. The bars are red, right? You ignore level bars like this black one. Blue bars, you allow for one blue bar, be up on no demand. Okay, so that's classic weakness.
Hi, it's Peter back again. I think it was yesterday in the news, there was a company called Google, who most of us have heard of, took a bit of a hit to the downside, and I think the trading was suspended for a few hours. And Gordon's asking about that. Was there any indication on Google that there would be such a big drop yesterday? So let's put Google up, just have a look. Now, we don't have intraday Google. Let's have a look at the what we do have, which is the daily.
But wasn't it somebody released the figures before the end of the day?
Yeah, that was yesterday, of course, by the look of it. Yeah, so we only got yesterday's data. Yeah, so the story was that the company accidentally released their earnings a few hours too early. In other words, before the market closed, the stock price fell severely, and I believe it was shut down or closed out for a while. Not closed out, suspended for a while. So the question is, Tom, is there any evidence prior to this big move down, whatever the reasons behind it? As Tom would say often, don't be fooled into following all the news and the events, but look at the chart. So Tom, is there any evidence there that was sort of lurking, that down move?
Right, thank you, Peter. Well, I mean, in hindsight, you can see that in the background here, look, we do have weakness, look. There's the first, look at this high volume down here. This was selling, look, because they're on all on up bars, right? Then it goes sideways as they support the price. They're supporting the price here, right? But we see there's a bit of a mushrooming over, and this here is a classic sign of weakness. It's gone up there, look. It's a form of up thrust. There's no signal on it, unfortunately, but this is end of day. You'd probably, if you had an hour chart or so on, you'd probably see a lot more. But that, look, it's distribution. There's the supply coming in. They support the market as the market has been, the general market was being marked up, look. Here, classic narrow spread up bar, very lowish volume, look. That's no demand. Then a fairly rapid move down to lock you in. Little up move, look, which was produce a signal, look.
There's a yellow box there.
The yellow box that would have been up thrust.
Up thrust, look. Give you a bit of hope. Right. And so there's a lot of weakness in this chart. A lot. Now, admittedly, you've got a sign of strength here, marked up. But it must have gone up on low volume, no demand. That's the only, I know it's easy in hindsight to see all this, but would you want to be long in a stock that's got fairly clear distribution in the background? And now it's going up on no demand. I don't know. But this could easily be a shakeout.
Can we look at the weekly? Simply because
Julio says it's more evident on the weekly.
Oh, that's a weekly, Tom.
Oh, it's a weekly. No, it is. He's right, Julio. Well observed.
Supply, potential buying climax on that other one.
I'm trying to get this mouse to work. Oh, there it goes. I mean, look at this trending system. Imagine if you were trading this on a weekly basis. Right, obviously there's some accumulation at the bottom, look. There's probably a stopping volume here, and bang, there's a sign of strength right there, look. Down bar, not a lot of selling pressure. But look, if you follow the trending system, look, it shows you that they're supporting the market by these blue bars. Look, up, goes red, blue all the way up, look, until you see high volume. Now, you're quite right. There's a lot more evidence, isn't there, in the weekly chart? And if you were involved in this particular stock, then obviously you want to check all these different time frames to see if there's one is showing more evidence than the others, right? The evidence would be there in all of them, but some of them you can see better. And this weekly chart's a very good example, look. There's your ultra high volume, look. Up it goes, closes off the high, enough to bring a signal up.
Potential buying climax.
Right, it is too. And then this one here,
No demand.
No demand. Ah, now that's classic sign of weakness, look. There's your selling climax, right, which we've told you many, many times. It's a real serious sign of weakness, followed by no demand. But look, it's 2 weeks there. Imagine all the time you've got. And that's what made this fall like this. Now, I heard them announce that news about Google, and they said, oh, the market's fallen heavily on poor earning reports. Mind, they made $3 billion profit anyway. I mean, it's almost like a joke to me. It's almost like a joke. So if you hold that stock, I wouldn't worry too much about it.
Can you put the daily down, Peter?
I'll try.
David says 5th of October, you see that it's clearly an upthrust. Hang on, I'm just waiting for it to...
What's this, the S&P?
No, it's still on Google, but the daily chart. We're trying to get it.
That's weekly again.
Right. On that 5th of October one, he says, why does that not produce a signal? We say it's clearly an upthrust. Tom, sorry.
Well, you see, it's one of the problems when you ask to produce signals on all these bars, on all the time frames, right? The thing is, the computer only understands what you tell it. And let me have a look closer at that. There's just not enough information there. But it's not really a clear upthrust, is it? It's an upthrust. We can see in hindsight an upthrust. But is it a clear upthrust? Sorry, my mouse is shooting. Here it is. I mean, if that high had been a bit higher up here, then you've certainly got a signal. That's the reason why there's no particular signal on that chart, on that particular bar. But you'll have definitely signals on the other ones, many of them. Okay. And that's the reason. Yeah. Okay. That's why you need to check the different time frames.
We're going to go back to the weekly now, Tom.
But by the human eye, it does look a very dodgy bar, doesn't it? Because it's tried to go up, and it's a red down bar at the end of the day.
We're just sorry about flitting around, but as the questions come up, Gordon says, seems that the smart money has taken the opportunity to sell lots yesterday, Tom. And the other one is from Brian here. The high volume up bar 3 weeks ago could have been interpreted as absorption as it was taking out the high from November 2007. But then it's followed by no demand, so definitely was showing weakness. Are you able to put more up, Pete?
No, the high was too far off ago.
Right.
Long ago.
Yeah.
Is that? What to be absorption volume?
Well, no, to be viewable.
It's...
Oh, here we go, yeah. Here.
Ah.
It was a high back in 2007, which was 5 years ago. And it went through that, but the question is that relevant as far as the subject of absorption? Is it too long ago?
Yeah, Peter's pointing out that was 5 years ago, that high, and obviously any influence that would have had would have been diluted immensely by now after 5 years. So remember, absorption volume is when the market guns up as it races towards or through an old high to the left. Now, whether you go back 5 years, I doubt it. But we're talking about a near high to the left. And then that could be often bullish. And then that, if it is bullish, they'll sure as anything test it. You'll see a down bar on low volume. But don't go back 5 years. I think that's pushing your luck a bit too much. It's the most recent high that normally that philosophy is attached to, absorption volume. But you can see on this weekly chart, definitely evidence, fairly clear evidence of weakness hitting this stock that's on the screen.
Okay, it's Peter back. Anybody got any further questions Tom wants to know?
Lance is going to put his post.
All right, Lance has said that he'll put his post on the forum for Philip to look at. This is the London stock. Was it VED or something like that? Yeah. Thanks, Lance. Yeah. Okay, so Tom wants a question. Edmund.
IBM weekly.
Okay, so Edmund is asking for IBM weekly. So let's see if we can get that up there. IBM. Right. Tom, what do you think of that?
Similar sort of thing, isn't it?
Yeah.
That's first time I've looked at this. So, and normally, first of all, we can see we've got a high here, right? So that will have some influence. But this is a more, we're talking about here with so-called absorption volume. As it guns up here, it's trying to gun up through here, look. This area here, this is the last high. And if that was bullish, then there would be a clear test somewhere. But we don't have any bullish by the look of it. I'll just hang on. I need 20 bars so I can see it a bit better. Oh, that's better. Okay. So there's this. Okay, so say you figured that was absorption volume, or potentially, right? Gunning through this top. Okay, because it's right next door to you. Now there is a down bar there, look. And you might say, well, it's just a test. But it's not, because look at the high volume. There's supply there. There is a lot of supply left in that stock right there, look. However, they marked it up, look. Notice the no demand here. Look, there it is. Definitely weakness, look. And that's why it's come off like that. I mean, these wide spreads down like that, as it races towards a former area of support, look here, is usually a sign of weakness. Now, you may get a bouncing effect, you know, we get, if it's weak, you'll see if it does go up, it'll be no demand. But that's fairly clear, that chart, look. If you look at it, is this a weekly chart?
Yes.
Makes it even clearer, because you've got all that time to think about it, look. All right? Potential absorption volume, you might say, or think. Looking for a test. There's a red down bar, but look at the high volume. There's supply in that market. That's a sign of weakness. And they mark it up, look, but it goes up on no demand. Right? There's a signal, even a signal to support you. So would you want to be long in that stock? I wouldn't. I'd be out of that like a shot. Right? And that's a sign of weakness. Widespread down like that. Close on the low. is a potential, definitely, sign of weakness.
Brian is suggesting the daily might be a bit clearer. Should we put that up and have a look? Yeah, IBM. Oh.
Wow.
Is that right?
Yeah.
Oh. I'm sitting there not believing it.
Yeah, I mean, that's pretty obvious there, isn't it? That you're in for a rough ride.
Oh, hang on. Oh, yeah, that's it. Oh, hang on. I think we need to click into here. Right, try now. Hang on. Now try.
That's it. There you go. Right. Okay. Well, you've got some serious signs of weakness here. I mean, first of all, you would appear to have a distribution area here, look, topped out by this up thrust, which we've seen before. It's not all that obvious, look, but it is there, look. It fell off from that down here, look. Okay. Not a lot of selling pressure. So they mark it up with the general market, or the market look up, up, up. But look at that. When you see an up bar like that on a narrow spread with an increase in volume, right, that's why the computer's thrown up a signal.
Selling pressure.
Selling pressure. So a computer could see it. So we should be able to see it. A dumb computer, remember, you are a lot smarter than a computer. The only disadvantage you have is that you've got such a good brain, it's absorbing all the news, everything that's floating around. You can't help it. And it's probably forming some sort of opinion, which you can almost guarantee is not going to be right.
Brian's saying look at the 21st. A radar, here. 21st, he says radar was alerted on 21st of September.
Yes, well, that looks like a weak-looking bar, doesn't it? That's why it's come off a bit.
There is another question on this, Tom. Well, I ought to.
But the weakness obviously hit here, look.
Yeah. Up
here, and there's your up thrust. So that was all clearly distribution there. In other words, selling for professional smart money.
Okay. Tim is asking, would you be looking for a low volume retracement to 200.64? So we're talking sort of here. Would you be looking for a low volume retracement to this sort of area, Tom? Are you going? Yeah. Right, don't be long.
It's not a good idea to ask yourself questions. Are we going to have support at this area? Is it going to do this? Is it going to do that? Because you don't know. The market doesn't know. What you have to do, you have to read it as it unfolds. Right? You notice I never give predictions on price levels because you don't really know what's going to happen until it gets there. But what we'll do normally at certain, Gavin calls them trigger numbers, that's old support or resistance levels, you can usually often see by the action of the volume and activity and couple with the price spread what they're likely to do. But you can see here, this is clear weakness right here at the top. And you've got weakness in the background. This is distribution here. There's a little up thrust. Right. It floated off. right? They didn't have a lot of selling pressure because they want to sell more. And as it marks up, back up into this level, this area. So that is a resistance level. And then when you see that narrow spreads up like that, and there's just a slight increase in volume, showing that there is some selling there, and then bang, they've gapped it down. That's a sign of weakness, even though we've got a sign of strength appearing there. But that would be fairly normal. But we have to let it unfold. Let the story unfold so you can read it. It's not a good idea predicting the market. It's all right, people saying, oh, down to this level and up to that level and all that type of thing. But it's best to look at the background and go with your trade. In other words, read the market as it unfolds in front of you. But once you learn to read these charts, then of course your skill as a trader takes over. And then you really start to, as they say, motor.
Edmund obviously has the intraday data. Tom doesn't have that for this chart, but he's saying the chart is getting interesting today. The spread is getting much narrower as well. So we can't actually put that up because we don't have that. But thank you for that, Edmund. Hang on. And Edmund also says, thank you, Tom, for the mentorship course yesterday. Lots of interesting information. Another one from Lance here. Can we have a look on a smaller time frame at what happens just before a bar smashes through an existing resistance level? I always hesitate when bars are at resistance. What tips or techniques should I be looking at to alert me that it's going to smash through? I know we've spoken about it before, but it would be good to hear again. Did you get that, Tom? I'm not sure really that there's any...
Yeah, you see, I'm the sort of visual type of guy. I need to be looking at a chart. And normally when these things crash down like that, the previous bar, very, very often, it's a narrow spread up, no demand bar. They know the market's weak. And they're just trying to mark it up to squeeze as much as they can out of it from one way or another, and then bang, down it goes. But normally you'll see that. But it's best to look at various examples, and inevitably, if you get these wide spreads down like that, you've got weakness in the background. Unless it's the only other thing is some genuine shakeout or some genuinely serious news, then it will allow the market to shake out perhaps. But other than that, it'll only go down like that if you've got weakness in the background. And in all these cases we've looked at, there's been distribution in the background. And that's why the whole thing's weak. And that's why they don't support the market. And given the opportunity, then they can mark it seriously down like that. Now, whether that becomes a shakeout or not, I'm not sure. But when we looked at the daily chart, if you look at the newsletter I did last week, I said at the bottom there doesn't appear to be any strong bars. I said, but don't be surprised if it doesn't bounce off that lower trend line, which of course it did on Monday, and it went up quite dramatically for three or four bars. But because there wasn't any substantial buying that we could see at the last low, it was just marked up really. The market allowed it to go up like that. It wasn't a genuine up move, and that's probably why it turned around and come off suddenly like this. I would say definitely that's the reason. It's all very clear, I know, in hindsight. I'm sorry about that. But you need to make a close study of anything you're interested in, different time frames, and more or less believe what you see. But don't trade unless you can see a clear principle that you can understand, because the principles do work. The market definitely, without question, moves on supply and demand. That's supply from the so-called smart money. Smart money are those traders that throw 5,000-6,000 contracts into the arena. Now, normally, people can't do that, but they can, and they do. And they know that sheer power will shift the market, alter the balance of supply and demand. So if you think about that carefully, then you won't get misled. And don't try to be too clever figuring everything out. Even, don't think, oh, well, it's probably low volume because it was a holiday or they're on lunch or something. Don't even think of that. Believe the chart. Because smart money, don't worry. If they go to lunch, they take their computers with them. I can assure you.
Okay, Jean has asked for you to look at JNJ. I don't know what JNJ stands for, but it's JNJ, Tom. Yeah, here. Could you evaluate it since October 1? So October 1 was here, down... Oh, hang on. Oh, Tom's scrolling through. God, here we are. I'm going to put the cursor, well, let's say from here. This is J&J. Does anybody... Oh, Johnson & Johnson. Like that there. Right, could you evaluate this chart, Johnson & Johnson, Tom? This is the daily chart.
Yeah.
And that's, yeah.
Well, of course, where the cursor is at the moment, and the mouse, look, it's very high in volume in that bar. So there was definitely some, that's what knocked the market sideways, look. It's the end of day, is it?
It's daily, yeah.
Daily.
Daily chart.
So look, it's been marked sideways for several weeks, look, or several trading weeks. Okay, so it goes sideways, look, right? But they decide they're going to have a shakeout, and there it is. A shakeout there, so it shows it's not all that bearish despite that volume. Right. So, sorry, I had to move the chart. There's the shakeout. This allows the price to go up. It's drifting up, look. There's not a lot of interest in the upside. Okay, well, that's if they're bullish, they're not going to show too much interest. Then it's marked down, look. There's a few signals coming. No, the spreads have become very, very narrow. There are a few potential signals here, look. Trade in harmony with the index. Okay, and then up it goes. This certainly looks like a sign of weakness. Massive volume like that as it moves up.
We don't know about that one yet, though, because it's not finished and it's E-signal as well.
It's E-signal. It's not finished yet.
Yeah.
But I certainly wouldn't be interested in being long when I see markets don't like ultra-high volume on these up bars. There's something wrong. And that wrong usually means there's supply in the market. And supply, and there's not a lot going on down here, look. There's enough to the narrow spreads, look. No selling pressure, yes. But there's no huge stopping volume. There's no climatic action. There's no serious buying anywhere. But they marked it up, look. That, to me, looks like a sign of weakness.
Lance is asking, so these narrowing, is that strength? That's who wants you.
Well, narrowing spreads as they go down is a sign of lack of selling pressure from the professional money or the smart money to the downside. That means they must be basically bullish. When you see those down bars like that on narrow spreads, and it begins to look a little bit like a saucer shape as well, look. Here at the bottom, look. And you trade in harmony with the index. Now, of course, as we all know, the index shot up these last few days. So it's certainly gone up with the index. But this looks too much of a good thing here. Markets don't like ultra high volume on up bars like that. And even on that previous bar, look, there's very high volume. There's definitely selling supply there and there.
Okay. Jean is saying, so I missed the narrow spread that caused it to go up. I was short since October 8. That's since October 8. There, she was short but missed this. Yeah. All right. Okay. Rafal, are there any other books which you would recommend to read except these which are listed in Master the Markets at the end? I'm not sure Tom would. Do you know any?
Well, because I can't see very well, I never read books. But as you all know, I've written two actually. Gavin's written a couple. It's all good stuff. If you keep studying these charts, you may flounder a bit at first, but once you get the hang of it, you'll be so happy, so excited that you can actually read these charts fairly well. And then, of course, once you do that, you keep homing your skills in, and your skill as a trader then develops around it. We can't actually tell you how to trade. There's so many different ways you can trade these markets. You know, options, futures, cash, all sorts of things you can do. So we can't and don't want to get involved in any of that. But we hope to be able to teach you how to read these charts. But the 4 books I believe we've got out, if you know every word, understand it, and don't forget you've got these dialog boxes. When you put the cursor over there and press F1,
Up thrust.
right? I mean, that's a classic sign of weakness, right? And if you read all these dialog boxes carefully and relate it to the prices and what actually happens, and read every word, you see an up thrust is only really genuine when you've got weakness behind you, not when you've got strength behind you. So you've got to keep all that in mind. I'd say, look, if it was all that easy, everybody would be doing it. But don't forget, once you learn to read these charts like this, you will be one of the few people on the face of this earth that can do that. There are not many people can read these charts like we're showing you. And even we've got a lot to learn, as you probably realize, but you will come along and learn with us. But read the dialog boxes, read all the books. They've got no end of discs with information on, which I'm sure Gavin's got listed somewhere, so you can listen to all that. Oh, and by the way, all of last year's newsletters were put together in a book form. And if you start off from page 1 and followed the line of my thinking about how we look at these charts, right? Each week, there's not a lot, there's only a couple of charts perhaps, and not a lot of text to absorb, right? Surely you can do that, and gradually you'll get around to thinking how you can definitely follow these charts. And you'll be so excited once you get your head around this that you'll never look back, I can assure you.
Just a few more because we're running out of time. Edmund says David Weiss has a book about to release called Trades About to Happen. I didn't know about that. Did you, Tom?
No,
but
Wyckoff's good.
Yeah. And Thomas says, are the old Wyckoff books worth reading?
Oh.
Well,
I don't know.
Tom, he
Which
does.
ones?
He doesn't know. You'd have to tell him. Let him know which ones. Where did Tom just say to look? Oh dear. Sorry, I wasn't listening at that point. What did you say to look somewhere, Tom?
The training discs that they have.
The training discs that they
Trading,
have.
you know,
Trading
the
discs.
Archive libraries full of,
The archive, of course, yes, in the club. The archives.
and the newsletters in a book form.
And the newsletters are in a book
You
form.
went through that page by page every week,
Yep.
and you learnt everything that was in there.
Yes, so Tom's saying that really everything that he teaches is revealed in that book for the weekly newsletters, week by week. Everything, the principles and everything that's come up is revealed in there as well. Right, Raphael's saying yes, in the next year Mr. Weiss's book is available to pre-order via Amazon. Oh, and Tim's asking what was it called? Someone please remind me again. Last question. Tom, do you consider opening price important? And if not, why not? The opening price.
Yeah, no, the opening price is not important to us. I mean, look, say you're a detective or a spy, and you've been told to spy on an individual, right? It's not going to do you much good getting into his bedroom early in the morning, right, and saying, oh yeah, look, he's getting out of bed. Your bosses won't consider that information. The thing is, at the opening, nothing's happened. And people, the only people that want the opening are those people that use mathematical formulas, because they have to have some sort of base to stick their formulas on. But I personally never use formulas. I personally don't believe in them. And the reason I've said this several times before, I hope Metastock and these people are not offended. But you see, with the mathematical formula, there are so many very, very clever people out there. And believe me, there are a few very clever people and people backed with money. Now, if there was a formula that was available that almost guaranteed you to make money, right, you would say, right, you'd be eagle-eyed waiting for that formula to develop. As soon as you saw it starting, you would be in there, either buying or selling in serious money. And your trading would dilute the formula, so at the end it wouldn't be there anyway. And that's really, now I may be wrong, I don't know, but that's why I don't believe in mathematical formulas. And you think about it. It's very interesting. I mean, they look good in hindsight, a lot of them. They say, oh, you test the formula. Right, if you go back and it may be fantastic in hindsight. Cool, look, it worked there, and so on. But it wouldn't work if professional money were diving in on it, because their activities would dilute the formula and it wouldn't be there. It's only there because nobody or not a sufficient number of people with money have traded it. And I'll put you back to Rita. I think we've got to finish now. I thank you very, very much for listening, and I hope we've been fairly useful information for you, and I'll talk to you again.
Okay, that's it for today. Thank you, Tom. Just the name of David Weiss's book, thank you, Edmund, for reminding me, is Trades About to Happen. Okay, that's it for tonight, and Tom will be back next Friday, same time. Newsletter will be produced this weekend at some time. I don't know when though, because I've got Saturday and Sunday completely booked up at the moment. Sometimes we leave it to the Monday morning to do it, but it depends on what's going on this weekend. Something might be cancelled, so can't say when, but we will do the newsletter. Okay. All right, Jean, I'll see your message and I'll let Tom know. Okay, we'll see you next week, and thank you for coming. Bye-bye.